Welcome to The Explainer. We've got a really fascinating story for you today, and it's all unfolding in Egypt's economy. It's this classic investment duel, right? You've got the engine of domestic growth on one side, and on the other, the ultimate global safe haven.
And look at this, both of our contenders are putting up some seriously impressive numbers. So far this year, in 2025, both gold and the Egyptian stock market, that's the EGX 30 index, have just delivered incredible returns, especially when you measure them in US dollars. Gold is sitting at a whopping 28% gain, and stocks are right on its heels at 23%. So, the big question is, what in the world is driving these two totally different assets?
All right, so let's dig into our first contender, the Egyptian stock market. I mean, it's had an absolutely stellar year, and the reasons why, well, they're a potent mix of what's happening at home and what's going on internationally. Okay, so to really get a handle on the EGX 30, you got to understand just how much power is concentrated in one place. We're talking about almost 30%, a third of the entire index's weight coming from just one single company. That's the Commercial International Bank, or CIB. So you can imagine when CIB moves, the whole market feels the rip.
And oh boy, did it move. CIB's stock just surged up over 24% this year. Now you might be asking why. Well, it's pretty simple. The bank is an absolute powerhouse. It's got high profitability, it's got strong liquidity. Basically, it's a magnet for any investor who's looking for a company with solid fundamentals.
But you know, it wasn't just about CIB. The entire market was riding this wave, like a perfect storm of positive conditions. You had foreign capital, what they call hot money, just pouring into the country, which really boosted liquidity. Then you had key sectors like finance and real estate posting really strong earnings. And on top of all that, you mix in some helpful monetary policy and big economic reforms, and suddenly, Egypt starts to look like a really attractive place to put your money. And here's a huge piece of the puzzle. The Egyptian pound got stronger. As the local currency gained ground on the US dollar, it was like an extra bonus for foreign investors. I mean, think about it. Any gains you make in the market are suddenly worth even more when you convert them back to dollars. That made Egyptian stocks a really compelling story.
And just to put that 23% gain into perspective, check this out. We're not just saying the EGX 30 did well. In dollar terms, it absolutely blew past major global benchmarks. We're talking about the S&P 500, the Dow Jones. Egypt's market left them in the dust.
Okay, so now let's switch gears and look at our second contender, gold, the timeless safe haven. And this is interesting, because while stocks were riding that wave of local optimism we just talked about, gold was climbing for a totally different set of reasons.
Yeah, gold's story has nothing to do with domestic reforms. It's all about global fear. As that flicker of uncertainty starts to spread across the world stage, what do investors do? They run for safety. And that's what pushed the price of a single ounce of gold to a remarkable $3,500.
And this little snapshot from June, man, it just perfectly captures the whole dynamic. You had geopolitical tensions flaring up, and investors, well, they got nervous. And you can see the result right here. The local price of gold shoots up over 6%. At the same time, the stock market, totally spooked by all the uncertainty, dips almost 5%. It is a textbook, classic flight to safety.
And really, that's what gold is. That's its core identity. It's not trying to be about explosive growth. It's about preservation. It's the thing people run to when they're worried about inflation, about recessions, or about all the unpredictable stuff happening in global politics and finance. It's your defensive shield, the fortress in your portfolio.
Okay, so you've got stocks being fueled by local growth on one hand, and gold being fueled by global fear on the other. You've got these two massive forces just pulling in opposite directions, which of course raises the million-dollar question, what happens next?
And this right here, this really boils the whole conflict down to its essence. It's growth versus safety. On one side, you've got the Egyptian stock market. That's a bet on continued success for companies, a stable currency, and all those reforms paying off. And on the other side, you've got gold. And that's a bet that global fear, inflation, and political chaos are going to win the day.
And let's be real, the path forward is anything but clear. The future for both of these assets is tangled up in these huge global questions that are, well, they're anyone's guess, frankly. What's going to happen with U.S. policy? What will the Federal Reserve do? What's the mood of the geopolitical climate? These are the things that are really going to shape the outcome of this duel.
Which brings us to probably the single most crucial point for the stock market's future. For this rally to actually have legs, to have lasting power, it can't just be about currency effects making the numbers look pretty. The foundation has to be real, sustainable growth in company earnings. You know, profits. That's the only way you build a market that's truly resilient.
So, we've looked at both sides of this duel. What's the big takeaway here? How should you or I think about this strategically?
The real strategic takeaway isn't about picking one winner over the other. It's about understanding the job that each asset is supposed to do. You want to think of stocks as your engine for growth, right? Tapping into those strong fundamentals in Egypt, but always keeping the risks in mind. And then you use gold for what it's always been good at, defense, a hedge. So really, the smartest approach is probably to diversify, have a bit of both, and keep a very, very close eye on the US dollar and what's happening in global politics. And that really brings us to the final critical question that sits at the very heart of this investment duel. In a world that is so constantly changing, what matters more? Is it the domestic growth you can build at home? Or is it the stability, or lack thereof, of the entire global system? That's a question every investor everywhere is trying to figure out right now. Thanks for joining The Explainer.